Washington, Reuters, U.S. consumer spending increased solidly in June as households spent more at restaurants and on accommodation, building a strong base for the economy heading into the third quarter, while inflation rose moderately. Other data on Tuesday showed employers boosting benefits for workers in the second quarter, but wage growth slowed down. With savings at lofty levels and lower taxes increasing take-home pay for some workers, consumer spending is likely to remain strong this year and allow the Federal Reserve to continue gradually raising interest rates. Fed officials were due to start a two-day meeting later on Tuesday. A euro Emery spending on a euro wants a euro trademark, not a euro needs a euro trademark, is always a good sign of consumer confidence, a euro, said Jennifer Lee, a senior economist at BMO Capital Markets in Toronto. A euro, or as long as incomes continue to rise and job creation remains strong, consumer spending should remain solid over the remainder of the year, a euro. The Commerce Department said consumer spending, which accounts for more than two-thirds of U.S. economic activity, rose 0.4% last month. Data for May was revised up to show consumer spending advancing 0.5% instead of the previously reported 0.2% increase. Last month, a euro trademark's increase in consumer spending was in line with economists' a euro trademark expectations. The data was included in last Friday a euro trademark's second quarter gross domestic product report, which showed consumer spending accelerating at a 4.0% annualized rate during that period after a pedestrian 0.5% pace in the first quarter. The economy grew at a 4.1% rate in the second quarter, almost double the January-March period, a euro trademark's 2.2% pace and the strongest performance in nearly 4 years. June, a euro trademark's increase in consumer spending sets it on a higher growth path heading into the third quarter. Consumer spending last month was boosted by spending at restaurants and on accommodation. Spending on goods was unchanged after surging 0.9% in May. Spending on services accelerated 0.6% after rising 0.3% in May. Prices continued to steadily rise last month. The Personal Consumption Expenditures, PCE, price index excluding the volatile food and energy components gained 0.1% in June. It had risen by 0.2% in the prior month. That kept the year-on-year increase in the so-called core PCE price index at 1.9% for a third straight month. The core PCE index is the FED euro trademark's preferred inflation measure. The core PCE hit the U.S. Central Bank a euro trademark's 2% inflation target in March for the first time since December 2011. The Fed is expected to leave interest rates unchanged on Wednesday after increasing borrowing costs in June for the second time this year. It has forecast 2 more rate hikes by December. U.S. financial markets were little moved by the data. Moderate wage growth. Spending in June was supported by a 0.4% increase in personal income, which matched a euro trademark's increase. Savings edged up to $1.050 trillion last month from $1.047 trillion in May. In a separate report on Tuesday, the Labor Department said its employment cost index, the broadest measure of labor costs, rose 0.6% after an unrevised 0.8% advance in the first quarter. That pushed the annual increase in the ECI to 2.8%, the biggest gain since September 2008. The ECI rose 2.7% year-on-year in the first quarter. Wages and salaries, which account for 70% of employment costs, rose 0.5% in the second quarter, retreating from a 0.9% surge in first 3 months of the year. Wages and salaries were up 2.8% in the 12 months through June, also the biggest annual gain since September 2008. Private sector wages and salaries rose 0.6% in the second quarter after jumping 1.0% in the January-March period. Economists expect a significant acceleration in wage growth in the second half of the year, boosted by a tightening labor market. The labor market is considered to be near or at full employment, with a 4% jobless rate. Benefits for all workers increased 0.9% in the April-June quarter, the biggest gain in 4 years, after rising 0.7% in the first quarter. They were up 2.9% in the 12 months through June, the largest increase since December 2011, after rising 2.6% in the year to March.